Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, boys and girls, this is a picture of what's going on in the world right now from NASA. These are the 6 planet conjunctions you're hearing about. This is when they all line up at 0 degrees or very, very close to it. It's a rare phenomenon, not super rare, but it is rare. We've seen it happen before. So I thought what we'd do is take a trip down memory lane and go back and look to see the other times we've seen this thing happening. So let's get over here, go back to 1987, and here's where we had that big triple conjunction up in here. Well, there were 6 planets right here, all in the sign of Gemini, Capricorn, and then they had to move down 27 days up, and this was the Venus-Uranus, and then to move down, and that's what we're watching. This is what I think we're seeing in the stock market right now. If we take a look at the Dow Jones, I'm going to bring this up here and show it to you. Here is the 1929 move. This was 618. The number was 358. It had been as high as 383. It came down to 320, rallied up to 358.70, and then it had the big move down in 14 days. I'm not saying something that's going to happen. I'm just showing you what's happened. Here is the actual Dow Jones itself. We went 100 points higher for today, but it's only off by 2 points, which 200 points, which is basically 99.3 or something. It's not much difference. In other words, here we got 6 days up, also coming at 61%. I don't know if it's going to work or not, folks. I'm just giving you this information because I've seen it before, and we're seeing it again. That's all I can tell you. So that's what we're paying attention to here this morning. Now, I wanted to show you one other one. Very, very interesting one here was posted to by our friend A.W. over there in London. Here is a big long-term picture on the German DAX. You can see the perfect ABCD that occurred right up here today at the exact high, and then you can see what's happened to the DAX today. You already see it's already having a relatively big move to that. Maybe these don't mean anything or not, I don't know, but here's what does mean something to me. If you take a look at this market going back, this is when Gartley did this work back in 1937. This was the rally high that we just talked about at 358. Okay, now look at the transportations. They only made a 382. Well, today it's a little bit different. Today the transportations is making a 61, but it's already down in here, but it's already made a 61% retracement, and that was on the open. It's been going down ever since. There's your shoulder, head, right shoulder. Now, the stock market has gotten all the way up to this level right here. Now, the only one that has not violated it is, of course, is the Russell and the. Let me get these up here so you can start to see some of these. You'll see the weakness in some of these coming up, but the main one, of course, was the Dow Jones. This is the Russell, as you can see here. It's been the weakest of the group. You can just watch it today. You can see it's been drifting lower all morning long. If you did the old 382 stuff, you had several places to get short in here, and that's some of the things that we were try to teach and show you what we're looking at on these things. The same thing was true with the Dow Jones. Now the NASDAQ, which has been the leader of the pack, we'll just get that up here, made the 78. This was the 78% retracement on the whole move, folks. That NASDAQ just made that just a little while ago. To get this up here and show you the whole, I'll show you the whole 9 yards right here. And so that's what we've done here, and we're still, selling off, but it's still way up in the air. Looking at this on the long-term daily, you can see that we did hit the 78% level right here. So that's made the 78. The S&P, of course, has gone higher than the 78% level. So it's the S&P leading the pack. The NASDAQ is following behind just a little bit, the Dow Jones quite a bit. So now let's get back to some of the things that we rely on when we're doing this stuff, folks. I learned this stuff from Dr. Miller about these conjunctions and oppositions and all this stuff. I never could understand it. I still don't understand. All I know is that when these things line up, something means something. That's all I can say. We're seeing divergences in some of these things, and that's what we're really trying to look at as we follow these things, because it's telling you ought to pay attention here, because if it's happened before, it's happened again. And we are seeing, major divergences. All right, let's get this out of the way so we don't have to look at that. Let's show you where the real action is happening, folks. This is in the currency markets, all right? I tried to do this with video. There's where we are. Now, remember, this is long-term stuff, but there was our target, was 110.12. It got to 110.01. Okay, now look what it's done now. We've been traveling down here for 2 weeks. What did we do today? We hit a 61% retracement, almost perfectly equal to the last move that we had. The harmonic number in that, there it is, pretty much right on, and there it is right there. So this tells you that the dollar has made some type of a pretty good bottom at this level. All right. Now, if that's the case, we'll get rid of this and we'll just take a look at the one we watch closely with the dollar, which is the reverse of it, which is the euro. And here's the euro right here, folks. Now, if you want to, there's your high way back here. You're going to be able to see it real easy. There's your high right here. Now watch the little thing move here, because you're going to see it go up to the 50. Oh, that's the wrong one. I got the wrong one lined up. It's this one I want to see. This is the one I want you to see. There's the 382 right here. Folks, it missed that by 4 pips. 4 pips is all it missed it. And of course, it's only backed off about 60 pips from that. But the fact that it's a 1, 2, 3, 4, 5, 6, 7-day rally right at that number, which is a lot weaker than the last rally. You see, the last rally should have taken you up to that level, and it didn't. So that's telling you the dollar is actually stronger than people are trying to tell you what it is. But there it is right there. And then you can see the ABCD on the hourly chart. Just get this up here, you'll be able to pop up, and there it is right there, A, B. Well, just see it a lot easier if I did the whole thing here, Lair. So let's put that in here, stick with the old A, B, C, D, and that'll get you to the promised land. And there it is right there. Went a tiny bit higher, but right in that ballpark. Of course, there was a couple other ABCDs in here too, but there was your number right up there. Missed it by 5 pips. Now, if we look at the British pound, we're looking at the same thing here. Get over here 1 second. I have watching something rather closely here. Okay, now there's the British pound. We've come down. We're having a good rally. We expected that to happen. Remember, this number we were looking at, we're down here at 122.50 was the long-term weekly that we looked at. It went below that, so we didn't have a position in it. I didn't buy any down here for a lot of different reasons, probably because I was trying to find a top in the stock market. That I don't know, but there's where we are right now, and you can see we're making a nice little retracement right here. We're going to blow this up so you can see it, and we're going to check and see how close we came to some of these numbers that we look at. So first thing we'll do is we'll measure it. I don't think it's this one because that's too far away, but let's just double check. There's your ABCD leg. And there, guess what? Oh my goodness, it's right on the spot out money of the exact 382 at 12375, and it's already $750 lower. So let's take a look at these others when we come back, folks. Jeff Hughes will be our guest at the break. Thank you very much.
This market has turned red, Tigers, and the question we should be asking ourselves is how to position for a potential bear market. Plenty of gains can be made in bull markets, but if we've entered bearish territory, that strategy needs to change. So, how do we pivot so we can see green in the red? Join Larry this month, January 10th and 24th for live trading action. You'll sit next to Larry as he places live trades, explains his methodology, and answers questions live. Larry brings his decades of trading knowledge directly to you, teaching you how to navigate this shifting market. Go to the front page of TFNN.com today and secure your spot pass for live trading Fridays with Larry Pesavento. Happy New Year, Tigers. We'll see you January 10th and 24th. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, this is the Australian dollar. I just want to show you it's making an ABCD pattern, just like we were seeing here in the other. Last time we had a 8-day rally. Let's just see, we're probably right at the exact 382 on this one. And I'll get this up here, and it's probably, there it is right there on the Australian dollar, 7-day rally at the 382. So the dollar is, US dollar is still holding its own, being pretty strong. Okay, now we'll get this out of the way here, and we will talk about a couple other things. So we covered the pound. We need to talk about the Japanese yen, and then I want to get to a couple other little things that need to be taken care of. Now, there was a 382 in the Japanese yen off of that move, and you can see we've already moved 150 pips higher, so that's following along the program. So now the question is, how are we going to get much higher than this? Nobody knows the answer to that. I'm just looking at the numbers, folks. The reason why I put those pictures of those planets up is because that's how I got interested in the astrology part, because of Dr. Miller. I was really skeptical when I went down to Sarasota, Florida in '86 and spent 2.5 months, well, not 9 weeks, 2 months, going over all the astrology and writing the book, Astro Cycles, A Trader's Viewpoint. But the only way she could prove it to me was by looking at the major lows and major lows, of course, but highs are more difficult. But the major lows and highs in the stock market over a period of 150 years. And every time we had some of these planetary things line up like this, you know, like little ducks on a pond, something big happened. Ta-da! March the 5th. 2009, okay, 1987. You know, I don't know what's going to happen now. All I know is this is a big one. I don't know if it means much or not. I'm paying attention to it because it might happen again. That's all I know. So that's why I'm bringing these things to your attention here. I have to show you this because this was one that I was watching very, very closely because we took a loss in corn. And then today, you'll notice here we had a big move in corn, made new highs here in the morning. Then it broke down. It stopped right at the 382, got almost all the money back. Well, not quite. Half of the money back that you would have made. And that's what it's doing right now, just, you know, bouncing around just a little bit. So whether that means much, I don't really know. I'm just telling you what I see and giving it to you what I think is worth here. Okay, now let's take a look here at the crude oil, because crude oil is another one that I've got a lot of things up here because there's so many things happening today, folks, and I think that's what's really important. Now, here's crude oil. Let's just take this on the hourly because we were watching it go down to this level right here. If you remember, I said watch this 382 right here. You see we made that 382 on the downside, and remember, we were looking at the potential for this 382 to come in. And where did it come in, folks? Right there today at 74.95, spot on right there. There's your ABCD move. It hasn't gone anywhere, but at least it did it. There was a number. You can see there's the 382 banging right against it right here. It makes a little ABCD pattern here. We had a 382 last night. That gave you this right here. Uh-oh, we got game going now, boys and girls. Hang on, hold on. The Cowboys got to do something here pretty quick. Something just happened that makes me happy. Hold on just a minute. Where are you, Cowboy? There you get this CO2 up here, get this up here, and see where we are. Okay, yeah, we're starting to break down now in the NASDAQ. You see it's starting to pick up. There was your 382 in the NASDAQ. I didn't have, I have to put the neural net over the top of it. There was a high, actually the high, I had to change this because that's where the high came in. I changed it because it was fitting so perfectly, and there was the high, and now the market's coming down quite a bit from the 786. It's about 80 handles under the 786, which may or may not be a good time. I don't know. Nobody knows that, but like we say, sometimes it's well, whatever it is, that's what it is. Hold on, let's get back to the crude oil, but I had to put that off to change something there. Okay, let's move over here, take care of the crude oil. Now, what I wanted to do was to spend just a moment, because Jeff Hughes is coming off. He's got some great stuff to talk to us about, as always, but we need to look at the others of that commodity, of the fracking. We need to look at the RBOB, which is right here. We're going to bring that up on the 60-minute. It had wild swings this morning, too. And here's where we were over the last few days on the RBOB. Now remember, this has been coming down quite a bit from the high we made back here on the 16th. There was your, let's just show you right here because we were watching these all the way. There's your first 382 retracement came in right here. There was a second one that came in right here. And it's now you can see we're coming down. Look where we're getting to, folks. We're getting down to this level right here. So what we need to do is we need to go to a 4-hour and make sure that that's going to be close to a 382 also. So we're going to bring it over. Here's what we're looking at. Now we've got this low way back in here. We already can see that we're already through the 382 on that. That was right there. And when that broke, that told you that the trend had shut the front door, that the trend had flat out changed. We'll just show you. There it is. See, once we start going below here, that told you your trend is changing. But now we're getting down near payday because you got to go back here to the 19th of December because that's going to be a major 382 coming in here, and it's probably it's already through it. That's not a good sign. Probably heading lower. You see this correction right here? That was pretty much spot on at a 50%. You'll see here. Well, it was 382. Well, actually, between the 382 and 50%, then we had to run up. That's your ABCD right there. You can draw it in if you like, which I will. There's your AB. There's your CD coming in exactly on the high here on the 16th of January. Now we're coming down on the downside. As you can see, we're moving lower, due to that. That might happen to stocks in some day, but not in my lifetime. But, you never know. Sometimes you find a bone that may or may not be worthwhile, but we'll have to wait and see as we go through and look at this. Okay, we get this corn out of the way. The next one we want to look at is the heating oil because it's in the same situation. If you're going to trade these, like Mike Moore says, you've got to look at the whole complex. That's where the fracking comes from. So there's go to your 60-minute on your heating oil. You'd think this would be stronger with sub-zero weather, but look at it. It's actually weaker. I mean, look at this. This crude oil is, the heating oil is weaker even when they have sub-zero weather. Now look, there's your first 382 right here. Then you have the second one that came in today. There it is right there. From this high, You're going to see there she comes in right there. And look there, from 57, wow, that's 9 cents. That's $2,000. If you were looking at something like that, and its trend is down, so that's it. So we want to look at the 4-hour and see where we're going to be looking at for a big picture. And there we're coming down strong. There was a beautiful 382. There was another one right there, but those have changed. The game has changed now because we've gone through that. Once you went through that 382 that told you you're headed lower, and you're still heading lower. So what we want to do is we will find out what the 382 off is this one, because this was a really big one. This took 2.5 weeks to complete this low. So that's why it is so very important. We're going to be doing this stuff on Friday for the live trading. I hope you can join us. Whoa, here we are on heating oil right now. So this is going to be really critical in heating oil as we speak. 248.41 on a 4-hour chart. We'll go down to the hourly and look at it. And we just hit it right in here. So this is what it's looking at. There's that 382 coming in right about here. So let's take a break because we got Jeff Huge coming up and be with you in just a few moments.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks. We're with Jeff Huge of Alpha Insights. Jeff, how are you doing, my friend? Welcome back.
Thank you. I'm doing great, Larry. Thanks for having me on the show today.
Well, tell us about the curse of the third year.
Yeah, we're now in the midst of the third year of the current bull market advance. We made a new high today, so that advance is ongoing. Historically, the third year of a new bull market advance tends to be fairly troublesome. You can see in this chart, courtesy of Strategas, that, if you look how the average first year goes, it's pretty much up and to the right. And, we kind of, came out of that October 2022 low and, more or less kept to that average first year. The second year is not quite as good as the first year. And of course, you could see in kind of the brighter green in the middle, we radically outperformed the typical average second year. Right now, we're kind of just doing exactly what you'd expect in a third year, kind of flatlining back and forth. And so, what I expect this year to turn out to be is fairly pedestrian, if at all. In fact, with history as our guide, we suspect this year is going to create a fairly important roadblock in the path of the bull market, and it could result in a long-awaited termination of cycle wave 5 that we've been writing about for many months now.
Yeah. Okay, the next one is the McClellan oscillator. Is Sherman McClellan, he's still alive? I know his son is, but is Sherman and his lovely wife, I think they're my age or a little bit older, living in L.A.? I'll have to double check that. Anyway, please continue about this.
I'm not sure if they're still with us, but
they were a few months ago. But these days you gotta check at the calendar every day.
Right. Tom's now monitoring the models and posting on them, and he does a great job of it. He pointed out the other day that the McClellan oscillator hit a 6-month high. He called it, I think he said, it's officially way the heck up there, in typical Tom McClellan fashion, right? And that doesn't mean that the move has to stop, right? But it does mean that the rubber band is pretty stretched. And in an uptrend, we usually look for some type of a divergence, which we're not really seeing right now. However, if we were in some kind of a counter trend, then, rallies, that end with a big spike up can be followed by a fairly significant downtrend under those conditions. Where we're at right now, making a new high today in the S&P 500, but not in the broad market, of course. The NYSE has not made a new high. The Russell 2000 has not made a new high. The value line has not made a new high. So, it's debatable whether or not it's been a counter trend for the broad market. Certainly the Mag 7 are towing the rest of the S&P 500 along with them to new highs.
Yeah, they sure are, especially that Amazon. Boy, that's been I guess that's why they call it Amazon. Okay, now I like this kind of stuff. The CTA, Commodity Commitment of Traders, isn't it for the commodity trading advisors? They're short position in bonds.
That's right. And so we've put this chart in such a way that when they're max crowded short, that red line is peaking. It's at its highs. And as you can see, there's a square around it kind of indicating that we've gotten back up to those extremes of short positioning on bonds. Everybody hates bonds, right? And it's turned the opposite direction. In fact, rather sharply to the downside last week when we got the CPI data, which came a little softer than expected. And so the question I think we have to ask ourselves is, was that spike to 4.8% in the 10-year Treasury yield the high? And if it was, where are bond yields going now? And what happens when bond yields go down typically? And that's the real question that we have on our minds right now. Our thesis has been this, rates probably topped. we've been early on this theme in our discussion. But over the past 5 years, we've seen that these changes in positioning have led to big rallies in bonds, and we think that we're on the cusp of one, if not in the early stages of one right now. And we think that this trend will continue until positioning reverses polarity to a max long exposure, and we're quite a bit away from that.
Wow. Look at those spikes in the VIX. My goodness. But they don't stay there very long, do they, those spikes?
No, they do not. And so we're talking about credit spreads here, really. And we've overlaid the CBOE VIX index on U.S. high-yield spreads. High yield is the dark black line, and the VIX is the kind of choppier red line. What it's really suggesting, I think, is that, with credit spreads now squeezed down to a 17-year low, the last time we saw that was during the Great Financial Crisis, right before the Great Financial Crisis, I should say, in late 2007.
Right there, I remember that, yeah.
Right, and that speaks to a level of complacency that exists across the capital stack. It's not just equity investors that think volatility has gone into some kind of a state of permanent hibernation, but it's also those that are making loans to the riskiest class of borrowers. And lenders have no fear at this point. They think they're going to get repaid no matter what. And, they're barely asking their unsecured creditors to pay a little more than, what we'd expect to get on a U.S. government bond these days. So the real big problem that I think we have to focus on here is that, it's not just default, but it might be liquidity, right? When the cat finally opens his eyes, right, and the two mice are kind of hovering in front of the cat, tempting him. We put that cartoon in our newsletter last month. There's going to be no bid for junk bonds. Spreads could easily blow out 300, 500 basis points overnight, or much, much more.
Yeah, that's a problem. Now, I've seen this chart before from Elliott Wave. About 85% of the folks are heavily involved in stocks, which you can see that because why not? They go up every day almost every day. And but that's where we stand right now. I think this is extended, but what's your feeling here, Jeff?
Well, this is data that was provided by SentimentTrader.com, another Minnesota company, I might add. And what this is pointing out is that if we go back to the 1950s and take a look how pension funds have been allocated to equities, we just reached 85%. At the end of the third quarter of last year. And, we're likely much higher now as of the end of the year, right? We won't know because they report this, months and months in arrears. But, at the end of the day, I think it's a simple function of appreciation would push it up to that point. And so, just holding passive equity exposure to the S&P 500 has really been a winning strategy for investors up until, really even today, right? Because we've made a new high. But, it might continue to be a winning strategy for a little while longer. But just given the current historical extreme in valuations, we think the ice is getting pretty thin.
Okay, stay tuned, folks. We'll be right back with Jeff Hughes of Alpha Insights. My God.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, with Jeff Hughes, Alpha Insights. Jeff, did this make a new high today at 6,100 in the SPX?
Yeah, just squeaked over. Yep, it did. It just,
shut the front door and raise the rent. I didn't even, I never, I know it's an ETF, so I don't have any, but the S&P missed it by quite a bit. However, that's a significant thing from on the day that I'm looking at today. This could be very interesting. Look at all the gaps in that thing on the way up since January 13th. Shut the front door and raise the rent. I missed that one.
The new high is less than $1 above the December 6th high. The thing that we've been saying here is that we've been kind of tracking this small degree head and shoulders top formation that, this last 1, 2, 3, 4, 5, maybe 6, 7 days of trading has, completely invalidated that. And so, the new high obviously suggests that, we're in an advance right now as opposed to a contraction. And so we had to adjust our count. It now looks like the January 13th low was the end of a fourth wave, which turned out to trade like a double zigzag. We think that this advance right now with the new high has just hit today the minimum that we need to count it complete. But I think it's going to extend up to the top of the prior trend channel. We've got a range, depending, how long it takes to get there, between 62.69 and 64.27 on the S&P. So that's our target on the cash index. What's interesting to me is that if you look at the lower panel of this entire chart, that looks at momentum going back to the July high. You can see momentum peaked in July of last year, and it made a lower high at the December 6th peak, and we're at a lower high yet today with this new high in price. And so there's a double negative divergence there in momentum relative to price. That can be resolved. Momentum can certainly go on to make a new high, and that would resolve this favorably. But if it doesn't, this tends to be a kind of a preceding condition that one would expect to see before the market goes down. And so it could be an indication that the market is in a topping, its final movement. And that's what we've kind of traced out in our work. We think we're in that final movement of the cycle wave 5 up. And once we get to the top of that channel, kind of in that, call it 63, 6,400, give or take, we think that will be all she wrote for the market, and we would be a better seller there.
Okay, now I see the broad market that you're looking at right here. It's really interesting here. The fact this is the value line. That's out of Kansas City, isn't it? Because I remember years ago there I used to do that spread, the value line. Hold on just a minute. And I'm trying to do two things at once. It was the Kansas City value line versus the NASDAQ, and the NASDAQ turned positive, and I think it was 83, I think, is when it turned, and that's when the NASDAQ went crazy to the upside, and the value line just didn't move anywhere. So this tells you that the broad market is not as bullish as some of the others,
Take a look for yourself. The broad market actually peaked, if we're looking at the value line geometric index, which is the 1,700 largest companies in the U.S. based on their revenues. In fact, they account for more than 90% of all the revenue generated by publicly traded companies in the U.S. That market topped on November 8th, 2021. We have come nowhere near that peak up around 700. In fact, the index made a secondary high at about 660 back in November of last year. And we just tested the 200-week moving average, and we're bouncing off it. Now, we've counted the decline into that 200-day moving average as 5 waves up, and we're counting wave 2 up as 3 waves. So that looks like a counter trend advance to us. So if we're right, we're in the early stages of the C wave of an ABC decline in the value line. The same pattern is evident in the Russell 2000, which is the chart to the right. That actually squeaked out a slight new high. We would call this pattern a flat, where the market comes out and challenges the prior high, but then fails and goes straight down. And so we've got an A wave. We've got a choppy advance up into that 245 level in late November of last year to finish primary wave B up. And then the same pattern exists on the downside here, where wave 1 down was 5 waves down, and then we've got a choppy ABC wave 2 that is struggling really to trade at its highs while the S&P continues to press new highs today. So our view is that the broad market is just not confirming the S&P 500, and that's kind of a nasty condition. It preceded the Nifty 50, right? If you remember the Nifty 50 in 1972, 73, you had this high concentration. Right. Yeah, you had a big concentration in a handful of stocks. It really wasn't even 50. It was 10 that had the majority of the market cap. And then the other 40 were just like, well, we have to have a portfolio bigger than 10. So let's add these other ones. Well, today it's the same thing. We've got 10 stocks. 7 of them are the AI trade with Microsoft and NVIDIA and Google and Amazon, et cetera. And then we've got a couple of big banks, Berkshire Hathaway and JP Morgan in there. And, they're, of course, finally doing better, with interest, with the yield curve steepening so that they can make a return on their money. But outside of those big stocks, the small cap stocks just aren't participating in the rally to the extent to which we can call it a durable bull market.
Wow, now we'll take a look here about your newsletter. Tell the folks about it, folks. Oh, there's your kitties right there with the mice. Yeah. Okay.
Yes.
Wow.
So our view has really kind of been volatility is what's we should expect for 2025, and we laid that out in our 2025 investment outlook piece, which was the one that we published at the 1st of January, first of the year. And this monthly newsletter comes out usually on the first Saturday of each month. So the next publication will be February 1st, which is kind of a rarity when the first of the month and the first Saturday of the month are the same day. But that'll be the next publication. But, the newsletter is it's free to subscribe. You get a healthy portion, I think 4, 5, 6 pages typically of what we're looking at from a big picture perspective. And then we've got a paywall for about $12.50 a month. You can get behind the paywall and see all of our positioning and recommendations and market analysis. We look at U.S. markets all over the place, the S&P, the NASDAQ, the Russell, We look at some unusual indexes and cycles that a lot of people wouldn't be familiar with unless you followed our work, probably. We dig really deep into the bond market, into the metals market. We've been recommending gold and silver for over about a year and a half now. And they continue to outperform equities this year. People don't even know this, but Bitcoin is another one of our recent recommendations. Bitcoin's up over 10% year to date. Gold and silver are outperforming the S&P 500 by a factor of 2 or 3. And so, we've been big on kind of alternative markets, Larry.
Thank you for being with us, my friend. We'll have you on in a couple weeks. I'm glad you're back safe. So have your wonderful time before you run into those 2 days of summer, July 4th and 5th.
Sounds good. You can find the newsletter on Substack at hugeinsights.substack.com.
You got it. Thank you very much, folks. Jeff Hughes of Alpha Insight. Stay tuned. We got a little bit more to go, and we'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, Norm Winsky was kind enough to put up a natal chart here so we could take a look at it. I wanted to show you how these planets are lined up in these houses right up here. Some of these houses don't have anything in them. When you get a bunch of them like this, folks, it just means the ducks are lined up in a row, and that's what's happening here. Now, this is just a lunar cycle right here. We're in a quarter moon right now, but then we have Uranus and Jupiter, very slow-moving planets way over here. Mars is also slow-moving, but the faster ones are right up in here. So that means there's going to be probably something significant happening with cycles. And this is how I learned how to do this. I don't understand it. I still don't. I'm scared of it, and I allow other people to give me the information, and I try to make my idea. Now, what I'll do tomorrow is I'll show you what happened here on March the 5th of 2007 when we were right at the bottom and you couldn't get anybody to buy a stock. No siree. We were down 85% in the NASDAQ, and the Dow Jones was trading at 6,000, just under 6,000, and my goodness, here it is now at 44,000. So it's been a big move here looking at this. So that's what we're watching here today. So try to come on tomorrow, and we'll have some talk more about these cycles that we're watching. This is a big deal, folks. When NASA puts it out and they have videos about it, you can go in and just Google. You can see the video. It shows you how it all works, and it's really cool. Didn't have that 40-some years ago when I first started looking at this stuff, but I'm scared of it, but I'm not scared of ABCD. That's the one that gets me to the promised land, boys and girls, and that's all I'm really worried about as I'm watching those. That's the real key to paying attention to what we're looking at, all right? So I hope that helps, and try to do something for your neighbors. Live every day in an attitude of gratitude, and may God bless, and we'll see you on the flip side tomorrow at 1 o'clock. New York time. We'll talk to you a little bit later, folks.